shift our attention now over to the markets. Joining us on the desk, Doug Simon from Trade House. Doug, good to see you.
Good to see you.
Let's talk about the reports that came out last week. Some notable things happened. In particular, let's start on the U.S. front. What did USDA say, in particular for corn and soybeans? What's the storyline?
Well, the big surprise is they increased the yields on corn by, 4/10 of a bushel and 7/10 of a bushel on the soybeans. So that was, I think, contrary to what most analysts, what people were expecting, what farmers were thinking based on what they were seeing in the fields. They did cut the harvested acres, just about 500,000 acres on each one of those, but that still left us with an increase in production. And when you look at the bottom line on soybeans, it increased our carryovers up toward 285 million bushels, which is a pretty substantial increase, up by about 35 to 40 million bushels. And then on the corn side, actually, we increased a little bit there on the carryover, but not as significantly as the beans. But those were the big surprises. China corn production also was up 11 million metric tons. That went straight into world carryover, and that was a big surprise. But not everybody always has a lot of confidence in those Chinese numbers, so we'll see where that comes out here in the next year.
There's always the traders report, get to their thoughts on what's going to happen. And the theme of this, the reports from last Friday were higher than expected. In particular, I want to zero in on some of the Nebraska numbers. I noted this one, USDA projection now for Nebraska corn yield for the past year, 182 bushels an acre. Let's look at that number though. Back in November, USDA was projecting 173, big increase there. You told me though, the soybean number surprised you.
Well, just talking to farmers that we work with across the state, there was a lot of variability in yields this year on irrigated and on dry land. The non-irrigated yields actually east of here, by Waverly were not great. But you got further into Cass County, they're pretty good. But I see a lot of people had, I think, problems with irrigation this year, keeping up or starting too early, or they had different varieties. It seems like the weather conditions hurt the soybean yields worse around here from what I saw in terms of yields. Corn was maybe a little more resilient, but there was a lot of variability too. You had some really good yields in southeast Nebraska on non-irrigated corn, but some variability on the irrigated as well.
Where do we go with the information from those reports when it comes to, in particular, corn and soybean trade moving forward?
Well, I always like to look at the futures. We talked about that a little bit. The basis right now is real firm because of the cold weather. Columbus has been trading up toward 40, 45 over, Blair's in that kind of 30 level. So a lot of the ethanol plants out, Aurora kind of out that way, are 20 over, into the kind of Jan, Feb. So there's some decent basis levels out there. The futures, though, are at a depressed level both now on the beans and the corn, especially after that. So I don't really necessarily like the futures levels in here. But whenever the basis is good, that's always the trigger to move the merchandise it and then worry about the futures later. But and then you're going to have to look into new crop, I think as well. We're coming up on a time where seasonally we like to start pricing new crop corn. We've already done some because if you look at where anhydrous prices were, you kind of lock in an increment of there. But there's some good options that you can use out there to puts to protect, corn for new crop, and then old crop, if you sell that, there's some call strategies you can put in place to keep some ownership, which is what high interest costs now. It's a lot cheaper to own it that way than it is to just put it in the elevator and pay 5 cents and give up 5 cents of interest that you could be earning. So there's a big cost of just storing and waiting. So right now.
Back on the basis front, good basis, but I suppose the question is, can you even move grain in some of the areas?
Well, that's why the basis is so good. I mean, literally everything's snowed in and drifted in, and it's really difficult. There's some moving last Thursday and Friday. It slowed down over the weekend, obviously, but looks like, we had a little bit of break here yesterday and today, and more snow again today, potentially. But yeah, it's going to be really tough. But the weather 2 weeks out looks like it's going to warm up. So to me, it's like, okay, you should be looking at those basis levels today and trying to get something locked in, because if we got 2.1 billion bushels of corn, carryover, and versus 1.2 billion last year, there's definitely corn out here that can move at some point. Nebraska might be a little tighter than the Eastern Corn Belt, but those basis levels were going to normalize. So you want to be moving that corn, take advantage of that basis now.
Okay, I want to get to a viewer question that came in, an interesting one, noting on the corn futures side of things. Viewer asks, is it more realistic at this point in this winter time frame to see $5 corn or corn in the $3 area? Your thoughts, Doug?
That's a good question. That's a tough question. Now, if I'm trading the Columbus basis at 40 over, I think it'd be more likely we get to $5. But if we're trading at a 30 under basis at some of the remote, kind of locations, yeah, that $4 level, we're not that far away from $4 corn in some of those areas. But when you look at us being really oversold here right now, it seems like we'd have a chance. Markets never go straight down. Just seems like technically there was a lot of washout after that report, a lot of volume on Friday in that report. So I guess, but I'm not wildly bullish where I think corn is going to go, back up $1 like we did in the last 2 years. We had some big moves, but we could get 20, 30, 40 cent bounce in here just because. And the weather in Brazil is going to be really important going forward. We're going to have to watch that. There's some other interesting things happening down there that are important to keep an eye on.
Yeah. Back here in the U.S., how's demand look for corn and soybeans?
Corn is lagging the pace that we need to be on to meet the USDA goal. It's better than last year in terms of the actual exports, but the pace is a little slow. Beans are right on pace, so we're doing well that way. But as South American production starts coming off, we're running into deeper basis discounts down there, and our window is going to shut here in the next 2 months.
Okay, let's get your final thoughts. What else do you want to share with us this week?
Well, looking forward to 2024. We're at $4.75 on corn right now on the futures. Beans are down toward $12. There's anticipation that we're probably going to shift some of the acres out of corn into beans by maybe 2 to 4 million acres. If we would add that many acres to soybeans, because of there's a little more better break-even prices in the beans relative to the corn, could see those really would balloon our carryout. So I think you need to be aware of that. Again, there's those put options that I talked about recently to help us get out further until we see more about the South American weather. At least it can give us a floor, which would be really good. And the same thing on corn. But if we do reduce the corn acres, we're still going to be probably in this 2.1 billion bushel carryover level, which is still pretty heavy. So again, we need to be looking at pricing new crop, especially on rallies. We need to be definitely looking at the corn. If we can get back toward $5, to be looking at putting some floors underneath that, or just going out and hedging it. So that's what you want to be looking at.